Now, what do investors want? Well, the answer is they want everything. There's no one product that will give the investor everything he wants. But right this minute, here's what they're looking for. And it's different from your deals. You know, when you say, I've got a building, I can fix it up, I can get new tenants in, and I can sell it. Wall Street has no patience for that. Any product that comes to Wall Street right now must have a positive cash flow. Not a story about a positive cash flow, a positive cash flow. They don't want to buy blacked out buildings, totally empty condos. It's almost a no-seller. They want an investment that replicates a fixed income vehicle. Well, real estate really doesn't do that, but that's what they're looking for. They want that monthly check or the check every 6 months to look like a bond. They want upside potential. That real estate has in a big way, and their other products really do not. They like long-term capital gain taxation. And by the way, getting back to those annuities, every dollar that's earned in an annuity comes out as taxable income. There's no long-term capital gain on annuities. So this very good product has a really big Achilles heel. They want an inflation hedge. Surely they're not going to get that with fixed income vehicles. They have to go to something like real estate or maybe a commodity. And they want the most important thing. This is really a biggie. They want a finite life of the investment. Finite term. Before on Wall Street, they had deals that would go out 5, 10, 15, 20 years. You know, the syndicators who put them together were milking the audience. They wouldn't let the limited partners out, and Wall Street hated them. And Wall Street didn't allow them back in. The big blow up about 20 years ago, where all these limited partnerships came across Wall Street and raised literally hundreds of millions of dollars. Very few dollars went back to investors. A lot of money was lost. And these deals did not have finite lives. So if you do a deal, have a finite life and say, look, this is the drop dead date of this deal. Everything will be sold in 5 years, 7 years, or 8 years. Now, depending on the product, that's not that long a time. These people are buying 30-year bonds. So an 8-year deal is not bad. The annuity, the average term of them, 6 to 8 years. So they can tolerate a 6 to 8 year term. 5-year CDs, big sellers. So 5 years is in the picture. So in case you get resistance on that, these are your answers to that resistance. Wall Street investors want transparency. They want to see right through the deal. They hate black boxes. They don't want any tricky stuff like hedge funds. They want to know that deal. If you cannot explain your deal to a 10-year-old, you shouldn't explain it to anybody on Wall Street. Not saying that there were a 10-year-old comprehension level. That's not true. It's got to be simple to sell. Simple. The more complicated you make it, the less it will sell. The more convoluted it is, the worse it will be. Investors want to purchase these products, but they don't know how to go about getting them. That is the job of the packaging agent, the syndicator. If they see deals in real estate, they're afraid to touch it by themselves. So you really have a field with no competition at this point. Wall Street's not doing this. You build up a track record, you can go to smaller broker-dealers, some of which, in some states, will do private placements. And from there, if you go to public offerings, which we'll talk about later, it's a whole different ballgame. Investors are going to ask the following questions in any deal that you show them. This is the Wall Street investor. What is the property that I'm buying? This is called specific identification versus a blind pool. Now, a blind pool is much better for a syndicator because you don't have to tie up the property. But an investor is visual. You want to say, I own that building. So you may have to have a combination of different products in there, some that you've tied up and some that you have lined up in a blind pool. The investor wants to know what the markup from cost is. If you bought that building for $500,000, he doesn't want to buy it to your three buddies for $800,000 when it goes into the syndication. He wants to see it clearly. He doesn't want to be cheated. He wants to know where his escrow money is and who's got it, who the CPA and law firm is. They should have brand names or at least prominence in your area. He wants to know what your financing strategy is. Real estate, by definition, uses leverage. But too much leverage causes the problems that we've seen today. So you have to go in to have a low leverage environment, into a low leverage deal. You don't want to have a high leverage deal. And just begging you, these other questions that we covered today, what's the back end split, what's the front end loading, everything else has to be clear and precise. The other part is, it's very important to the investor, is what's the back end deal? And it's not going to be a sweetheart deal. In other words, you're not selling off these properties to your brother-in-law. And the most important question the investor wants to know is, guess what? Will I get my money back? Will I get my money back? He's going to ask that 57 times. That's the question. You want to make sure that you have a good enough property there that he gets his money back. What do you think the single most important thing is about selling the deal on Wall Street? You think it's the property location? Raise your hand. Not location? No, it's location, location, location. No. Is it the real estate itself? Beautiful looking building?
White package?
Is it the way you put the syndication together, the split? It's the story. Absolutely, positively, you are selling a story. Not a bogus story, not a BS story. A real story of how you can make money on Wall Street through you by buying this real estate. Wall Street looks at this as another investment. It just so happens to be real estate. It could be bonds, it could be anything. They want a story, and the story has to be very, very good. How he's going to make money, what the cash flow is going to be, when you're going to sell the property. It's going to have a story with a happy ending.